Welcome, Jordan Goodman, to Wealth Matters Show. Thank you so much. And as you can hear from my voice, I'm so excited to be with America's money man, Jordan. How are you,
Great to be with
sir?
you, Alpesh. Absolutely. They call me America's money answers man, actually.
Yes, money answers, man. So, can you introduce yourself?
Sure. So I've been America's money answers man for about 40 years. I was at Money Magazine for 18 years. I've done 13 books on different financial topics. I did one called Master Your Debt. I did one called Fast Profits in Hard Times. I did one called Master Your Money Type, the Dictionary of Finance and Investment Terms. I won't go through all 13, but anyway,
Yeah,
13 different
that's
books.
crazy. But to put it in a nutshell, I read Master Your Debt book and I was hooked to it, and that's why when I started the podcast, I reached out to Mr. Jordan Goodman. So again, as I said, I'm looking forward to this episode.
Great. And I'm on my own website, moneyanswers.com, and I have my own radio show called The Money Answers Show, which you're going to be a guest on pretty soon.
Can't
I
wait.
do what's called the Money Answers Minute. It's a YouTube channel. I've got the Money Answers YouTube channel. I've got the Money Answers newsletter. I have everything Money Answers is what I'm all about. If you have a question, I've got the answer.
That's awesome. And that's what we are looking forward to in this episode. We want to talk about different tips and tricks or strategies for finances, especially focused on America. But of course, a lot of these strategies would work anywhere in the world. So
Correct.
when we were discussing, and I have had that episode regarding using HELOC to pay off mortgage, but then you mentioned that we can use credit line banking strategies to pay off other debts. How does
Correct.
that work?
So yeah, I mean, it started with using the home equity line of credit to pay off a traditional mortgage, and that still works, but it's expanded now. So you can use what's called a PLOC, or personal line of credit.
Personal line of credit. Yep.
You can use a credit card. You can use any line of credit that you can put money in and out of on a regular basis. And the concept, it's evolved into what's now called credit line banking, where you
Okay.
use a credit line to keep your income pushing your balance down every day, as opposed to the traditional banking system where you keep your money in a checking account earning nothing, and you pay interest for 30 years on a mortgage where the
Right.
amortization schedule is all the interest is up front, and you're making very, very little progress on the principal.
Right.
And the bank is telling you you're doing a great job by giving them your money for free,
Yeah.
paying them interest for 30 years, and even better, if you refinance and start a new 30-year clock all over again, the bank thinks you're doing an even better job.
Yeah,
Right?
because and I was in these shoes for a while, right? And when I refinanced last time in 2016, I was like, oh, you know what? I got really nice and great interest rate, and this. Then I started studying, and I realized that, oh crap, because I've been, and sorry for my French, but uh, I've been paying the interest again and again, and as people may not know, but most of the interest is front loaded in
Correct.
most of this insurance or interest products, right? Like it's like insurance premium. When you get a life insurance premium, most of your premium is front loaded or the fees are front loaded.
Correct. So
So
you're making very little progress with an insurance policy and with a mortgage. Now, when you close a mortgage, the amortization table is right there in all that pile of paper you never
right,
look at.
we never read because they
Right? And
give you.
it's right there. Months, years go by. You could go 10 to 15 years, maybe if you're lucky, pay
Right.
off 10% of the principal.
Yeah, they
Something
give
like
you like 2,000 pages to sign. Come on. How can you go through
so
those?
it's right there in black and white, but they know nobody's ever going to look at it. So
Exactly.
instead, so that's the traditional system, which works very well for the banks. But the new system, this credit line banking, is what works well for the customer because your cash flow is constantly pushing down your principal in the cash of the credit line, which you can then use to pay off your mortgage, pay off your credit cards, your student loans, your car loans, any loans at a lower interest rate and much faster. The key thing you have to ask about any loan is how fast do I pay off my principal? Banks don't want you to think about that. They want you to know what's the rate and what's the payment.
Right.
And that's a smoke screen to keep you away from the real question is you're paying your principal down very, very slowly.
So,
Okay?
so let me ask you this, and I have heard about PLOC or personal line of credit strategy earlier. What's the interest rate risk? And that's the question everyone asks me. They're like, oh yeah, my mortgage interest rate is 3%. And this damn thing is 5-6%. How am I gonna pay it off? So same thing with PLOC. Usually the interest rates are like high upper of 8, 10,
It
12%.
depends on your credit as to what the rate's going to be.
Okay.
But again, the rate is not what's important. What's important is the rate of principal paydown, okay? So even let's take an extreme example, okay, of your mortgage is at 3% and your HELOC is at 6%. It wouldn't normally be that high, but let's just have fun with it, okay? It still makes sense to use the HELOC because you're paying the principal down every day by having your cash flow pushing that principal down. So you're paying the 6% on an accelerating decline of your principal, whereas you're paying 3% on almost no decline in the principal. Right? So that's the trick, is that it sounds great, 3%, and it is a great rate. But if you're not making any progress in the principal, you'll pay 3% for 15 years before you make any progress.
Exactly. The first 10 years, you don't pay anything.
The rate hardly matters. What matters is the principal going down. Now, there's a website we've both dealt with before called truthinequity.com that models this out for you. They're very good people. I've dealt with them for a long, long time as an affiliate. And so what they do is you go on there in what's called a personal profile. You put in your income, you put in your expenses, you put in your house value, you put in your mortgage, you put all these things in. And it's going to say, based on what you're doing today, it's going to take you 28 years to pay off your mortgage. And with the numbers you just gave us, it'll be 5.6 years, whatever it comes out to be. And they show you step by step how to do it. And it, as they say, it's not magic, it's math. People think it's magic, but it really works because your money is working for you every day instead of working for the bank. You are in effect doing to the bank what the bank is normally doing to you.
So be your own bank, right?
Exactly.
It's the credit line banking strategy or the life insurance, that whole life insurance where it's the cash banking account.
Cash value builds very slowly. Correct.
Exactly. Cool. No, that was very
We just saved your listeners tens of thousands of dollars and 25 years off their mortgage and all their other debt on their existing level of income.
If they take action.
If they take action. If they don't take action, it will not work, I can guarantee you.
So I've been telling this about this to a lot of friends and, of course, listeners, but they have to take an action, right? So
even part of what the truthinequity.com people do is they'll do a worst case scenario. They'll say, what if rates went from 4% to 10% tomorrow, which would never happen.
Right.
They say, oh, instead of paying it off in 5.6 years, it'll be 6.2 years or whatever, you know, in an absolute worst case scenario, because you're making progress in the principal every day. That's the magic. That's the secret sauce.
Awesome. So that was very helpful even for me. So just last question on the PLOC side, how do someone get a PLOC, or is it just a credit card, or can I go to my bank and ask, I want to get a personal line of credit?
Personal line of credit. And the rate shouldn't be that high. I mean, obviously the better your credit score, the better it's going to be. But it should be in the 7-8% range, something like. The main thing is it's liquid and you can put money in and out of it. That's the key thing. You can do this with a credit card as well. I mean, that's going to be a higher interest rate. But the interest rate is not as important because you're paying that principal down real fast.
Thank you. That's pretty helpful. So the next thing I wanted to talk to you about, because, you know, credit reports, credit scores, I feel like they're a myth, right? Because there's so many different models, and then, of course, Equifax getting breached, data breach, etc. So how can someone improve their credit report and credit score? By, you know, because there will be, because of the data breach, or there may be fraud, or for any reason, there could be errors on your report. So are there any laws regarding those, and how can someone do or correct their credit score or reports?
Yes, so there is a law. It's what's called the FACTA law, the FA, which stands for the Fair and Accurate Credit Transactions Act. And what that says is you have the right to challenge errors in your credit report. And at least by law, if they cannot be proven to be accurate, they have to come off within 30 days. That's the theory. Now, it doesn't work that easily. Okay,
I wish.
You have to battle with these credit bureaus. Now, you can do it. It takes a lot of time, a lot of effort. You have to write these letters saying, no, I didn't pay late on this card, or I didn't default on this, or I didn't go bankrupt, or whatever it may be. And it's a whole process you've got to do to get them off. So what I say, it's better to have other people do it for you who specialize in this. The place that I think is best is called Credit Blueprint. and their
Okay.
website is creditblueprint.info. And what they do is they battle for you. And your typical credit score is going to go up 100, 150 points, something like that, by getting these errors off. And you were exactly right. In many cases, the errors are not anything you did wrong. You
Right.
might have been hacked. They hacked the central database of all Nordstrom account holders or
Yes.
Ford or whatever it may be. Okay, and they did identity theft and they all kinds of things. You didn't do anything wrong, but it doesn't
Right.
mean you haven't been a victim. Okay, so you have to clear these things up, and it takes a while. And often, whenever you're confused with somebody else, they're the deadbeat. You're not confused with like Bill Gates or Warren Buffett's credit report, right?
I wish.
That never happens. It's always somebody who's not paying their bills.
Yeah. Yeah. Exactly.
So that's a way of getting your credit score up. Creditblueprint.info can help a lot of people. And they just take dogged determination to make this happen. And it's really worth it because the higher your credit score, the more credit you can have available and the more, lower your interest rate's going to be for your personal use, but also for buying real estate and all the things you talk about all the time.
Right. Yeah. So I can't emphasize enough about credit score. Now, credit score is, of course, as you said, buying real estate or anything else, but even finding employment, it's becoming a big deal,
Correct.
right? So when, my wife was looking for work, they run the credit report right away, right? So it's not just credit score is pretty much everywhere. That shows that not only how bankable you are, but how reliable you
And
are,
another
right?
example, certainly for a job, if you're renting an apartment, your apartment landlord's going to look
Right.
at it. If you are getting a car insurance policy,
Yes.
they're going to look at your credit report more than your driving record.
Yep. Yep.
So
You should be able
it
to
has
pay.
other implications. That's correct. Not just getting credit. You really want to get that as high as it's possibly, and many, many people's scores are lower than they should be because they don't take care of these errors.
So that's great. The other thing we were discussing, and I thought we should bring it up here too, which I have never looked into as well. And then once you mentioned, I was searching on Google, and I'm like, oh, this is a real deal. It's the mortgage payment.
Right.
So how can someone be overpaying a mortgage? Why would your mortgage statements or mortgage payment have errors or issues?
There are
And
three. Yeah.
why would no one know about it?
The banks get away with murder. Okay. So there are three ways that mortgage payments are typically wrong. The first one is if it's an adjustable rate mortgage, it's going up and down based on some
Right.
index.
ARM.
It could be an index like LIBOR, it could be the prime rate, it could be the national mortgage rate, whatever. There's some index that's going up and down, and there's a spread over that index. Typically,
Right.
that's what it works.
Yep.
That's where the problems come in because they adjust it up or down incorrectly. The spread is wrong. As you know, there's a lot of mortgage servicing companies that sell and buy these mortgages like pancakes.
Yes. Yes.
And when that happens, the original paperwork is often lost.
Most of the time.
Tremendous mistakes in adjusting a adjustable rate mortgage. So a website to help you there would be verifymymortgage.com. And what they do is they look at your original document and what you should have been paying, and then they see what you've actually been paying. And about 40% of the time, they find people have overpaying. And they have thousands of dollars in overpayment that get refunded to them. And then they affect their the current payment to the lower correct. And they really make very specifically, they know what day the interest rate should have gone up or down and what the lending rate and the spread and all. You can't possibly figure this out on your own.
Wow. Oh, yeah. So 40%.
40% are wrong.
That's a pretty high number.
And it's always now, if it's an error in your favor, you don't have to tell the bank, right?
Right.
But it's very rare that happens.
Right.
It's usually an error in their favor,
So what kind of documents do we have to provide? The entire closing document or just the hard statement?
Well, the closing document's going to show what the interest rate was, what the spread is, the legal part of the things. But then you show them your history of payments.
Okay.
Every month. And, it should have gone up, it should have gone down. And then they compare what actually should have happened because they know the dates that the prime rate went up or down and they have the records of all this, the indexes that it's based on. And then they say in many, many cases, they find it's wrong. So you get a rebate and then you get a lowered payment. So that's the first one, verifymymortgage.com. The second one is escrow. So escrow is where they're holding aside money for property insurance and property taxes. Many cases, it's over escrowed, thousands of dollars.
Oh,
over.
yes.
And again, you don't know what they're doing. They assume insurance premiums are going up maybe more than they do. They assume property taxes are going up more than they are. Again, you see what it should be, what it actually has been. Thousands of dollars can come back to you and you can get the escrow down. That's something that people just pay automatically without even thinking about it. So it's the same place, verifymyescrow.com, that can audit it for you and make sure you're not overpaying in your escrow. And the third one is PMI, private mortgage insurance. Now, in theory, when you hit 20% equity, you don't have to pay PMI anymore.
Yes.
Okay. Yeah, well, the PMI insurance company is not like waiting. Oh, we want to make sure that the moment they hit 20%, we stop paying insurance premiums. Doesn't work that way, okay? No. The burden is on you. Now, there's many ways you can get over 20%. You could have put an addition or improvement on your house.
Yes.
You could have used the credit line banking system we talked about to get your equity up by paying your mortgage off faster. You could be in an area where housing is appreciating rapidly and get over that way. So there's lots of ways of doing it, but you have to take the initiative. So the same place, verifymypmi.com, we'll take a look. And in many cases, people are paying PMI when they've got 25, 30%, much higher than 20%. And the PMI company is glad to take your premiums, and just as long as you'll pay them, they'll take them, you know? So that's another area. So those are the three areas, the adjust rate mortgage, the escrow, and the PMI, where many people are paying far more than they need to on their mortgage.
I think this is the biggest thing about mortgage, and I didn't know about the correction of mortgage as well as PMI, but I have my personal story on escrow as well as PMI, where, you know, the escrow, I had to reach out to them.
Right.
And I had to get some money back from the title company, even while closing. They made a
Exactly.
mistake, and they were like, yeah, they totally forgot about it. They had nothing to do till I kept calling them and my insurance company saying, no, I was charged for this much for the insurance. The insurance company said that, oh yeah, they have returned the check to the escrow. I never got it. So that's my personal story just last year, where I kept calling them and finally I was able to get my money
Takes
back.
persistence, you know? So what these people do at this Verify place is they give you the documentation so that you don't have to do it yourself. So they, you know, here's what your payments should have been. Here's what they actually have been. Here's the difference. Here's what you should get a refund. And you send that to the bank. And usually they say, okay, we're wrong. Or if they're not, they'll come in and advocate on you to say, this is the refund you have to give me and how you have to lower my payments. Banks normally are not too happy about that, you know?
Oh, that's awesome. This is the crux of this podcast, actually. So another thing we were chatting about is the life insurance policy. And
right.
Of course, I have cash value life insurance policy. A lot of my friends, because you are building kind of a supercharged savings account. But then I also heard from other person that they invest in life settlements, right?
Right.
So let's take it. Let's take a look at it from the other side. Why would someone look into selling their life insurance policy?
It could be a source of hundreds of thousands of dollars that otherwise just completely disappears. When most people get to the page, and it's going to be at an older age,
right,
when they're built up cash value, they've been paying premiums for 30 years, for 50 years, you know, for
right. The mortgage is paid.
Mortgage is paid, and they don't need the insurance anymore. Say the kids are now self-supporting,
right,
you know, and you don't really need it. But what you need is cash to live on.
Oh, yeah.
Okay? So if you sell your life insurance policy into what's called the life settlement market, you can get hundreds of thousands of dollars that otherwise you'd let the policy lapse, and the insurance company is happy for you to go. You've given them thousands of dollars for many years, and they're off the hook. Okay? This is keeping them on the hook. Now, the people who buy life insurance policies in the life settlement market are hedge funds for the most part.
Right. Yep.
So they'll buy a whole portfolio of 1,000 of them or something, and every year somebody dies and they get a huge payoff. So let's just make up an example. Say you're 75 and you've got $1 million policy. You could sell that for maybe $300,000 today. Hedge fund buys it. They become the beneficiary. They own the policy, and when you die, they get the $1 million. So they invested $300,000. They get $1 million. They don't know when.
Yeah.
But the older you are, the more money you get paid. They'd rather that you not stick around too long, right?
Oh, really? Oh, yeah. And of course, you have paid the policy for a while too, right? So
right, you've been paying in. So What most people will do is say, I can't afford the premiums anymore. I don't need it because my kids are self-supporting. I'm just going to let it lapse. And the insurance company
Yeah.
has a little party saying, great, we took his money for all these years. We don't have to give him anything.
This is amazing. Yeah.
So there's a place that can help you called fundinglife.com, and they put buyers and sellers together of
Okay.
insurance policies. So your listeners would, for the most part, be a seller of a life insurance policy.
Right.
And they would be the ones taking in $300,000 or whatever it may be. And then they don't own it anymore. They don't have to pay the premiums anymore. And when they die, whoever buys the policy. Now, there are people who buy policies as well. It's a very active market.
Right.
In a case like we just said, you've tripled your money from $300,000 to $1 million. You just don't know when, right? So the older you are, and frankly, the sicker you are, the more money you're going to get.
Yeah, of course.
Now, you can't typically do this like on your deathbed. That's what's called a viatical. That doesn't work too well. But, say you've had a heart attack or some medical condition. This is the one time when being old and sick pays off for you.
Pays off, yeah. And then in some cases, you want to use that money instead of waiting that money to go to your heirs when they are already self-supporting. They don't need any money.
Correct.
Right? Why wouldn't you take advantage of the money you have, built so far?
Invest it for income.
Yeah, for so long, right?
Put it in real estate or buy REITs or whatever. But
exactly,
that money can provide for a nice income for your retirement.
Yeah,
as opposed to paying premiums, you're now receiving money from the same capital. And most people don't even know that exists.
Right.
The insurance company, the insurance agent will never tell you that you could sell that policy. They want to get off the hook as fast as possible.
Yeah, I just heard about it, I think last year or so, and I was like, wow, this is an interesting market. So the website you mentioned, it's like a platform, right, which connects buyers and sellers.
Yeah, it's like a broker basically. And so what they have, last I talked to them, they have many, many more buyers than they do sellers. They've got many more hedge funds wanting to buy policies than policies are available. So if you've got the right kind of policy, are in the catbird seat to have them compete with each other to pay you more money. Isn't that a wonderful thing?
No, it's awesome. So yeah, I would look into it in about 30, 40 years. In
either case, but if you have some older listeners, or in many cases, their parents.
Exactly. Parents
may have a policy and have no idea.
Even grandparents, you never know. Yeah.
They'd have no idea that they can sell. Now, you can do a cash value policy like whole life or variable life, but you can also do a term policy. Now, the thing about a term, it has to be convertible into a cash value policy.
Oh, I see.
Okay. So, because a term is going to run out. Nobody's going to buy a term policy that's going to run out. But most term policies have what's called a conversion privilege.
Yeah. Yep.
And you convert it into a whole life or variable life or universal life, and then somebody can buy it. You don't have to actually convert it. It just has to be convertible.
Convertible, yep.
Because the people who buy it then convert it.
Yes.
So, but once you've got that, so most insurance policies can be sold in the life settlement market. Again, fundinglife.com. They will give you a free appraisal and say, would you like 300,000? Would you like 400,000? These are not bad choices to have to make.
Well, that's very helpful as well. So the last question I have, or the discussion I want to do is, I actually just bought yesterday as a birthday gift. I got a Tesla Model 3.
Excellent.
So of course I got a loan on it. So it would be a good segue into it, that why would someone refinance a car loan to a lower rate or different maturity rate?
All right, so let's do two things. First of all, I hope you got a great deal on the car, because I probably could have saved you a ton of money.
Oh.
There's a car buying service called CarQ.com, which is actually San Francisco.
Oh, really? I thought they were based out of New Jersey. Okay.
CarQ.com, and they negotiate for you to get the absolute best deal on the price, on the financing. Now, I got a car myself a year ago. I'm in New York. And it turns out they got the best deal in Newport Beach, California.
Oh, wow.
They saved $8,000 over what I could get it from my local dealer here.
Nice.
So it cost me $800 to ship it across the country. So I paid $800 to save $8,000.
Yeah,
so
you can't go wrong with that.
So that's CarQ.com. And then as far as getting the best financing, now you probably, good credit and all that, but a lot of people out there have not so great credit and pay extremely high interest rates on
Right.
cars, 13, 14, 15%.
Oh, wow.
A lot of subprime car loans out there, okay? So what you can do is refinance that car loan to a lower interest rate and to change the maturity of the loan so that you can get the payment down to a more affordable level. So there's a free website for that, which is called MyLoanGen, Gen, myloangen.com. You put in your current car payment, how many more months you have to go, the interest rate, and then you go to a little dial, and you choose what maturity and what interest rate you want. And when you get one, it's going to show you what the payment's going to be. And when you pick the payment that you like, you click submit, and then credit unions from around the country compete for your business to give you the best deal on a car loan.
That's
So
even better.
it's like instant refinancing of your car loan from some very, very high levels. What you do not want is the repo man to come in the middle of the night and take your car away.
Nope.
You probably have never had that experience, but a lot of other people have.
Yeah,
you know?
I watched the movie.
They do these reality TV shows on
But
shotgun at 2 a.m, you know.
But I was reading about it that right now the student loan crisis and the car subprime loan are the two biggest
Correct.
issues with, and it's a stock market and real estate are doing well, but these are the two things which we need to watch out for in near
Something
future.
like 90% of the car loans today are subprime.
Wow, who would have thought that?
People, you're borrowing against a depreciating asset.
Right.
It's the opposite of real estate, which should be appreciating.
Exactly. And
you drive a car off the dealer's showroom and you just lost $5,000 in 1 second.
Exactly, right out the gate. And real estate, as you said, appreciating, if you are not using it for yourself and if you are investing, you are getting cash flow as well, right?
I mean, a car, if you become an Uber driver, I guess it's cash flow, but you have no life at that point.
Yeah, that's your time value for money though, right? So you have no life, you are trading your time. Again, you better
There's no leverage in that, right?
9 to 5 job. Right.
More than that, probably. So cars are not income producing for the most part,
Right.
you know. So anyway, that's a big problem. A lot of people have taken on they've got some beautiful cars, but taking on payments they can't really afford. Here's a way of getting the payment down and making it, you choose what payment you want, what interest rate you want, and what maturity you want. You are now in the driver's seat. All the things I'm giving you here, you are now in control instead of the financial institution being in control.
And that's very important. And thank you for sharing all of these websites and tools with my listeners.
Great.
So you mentioned that we have a page.
A landing page.
Yeah, a landing page using which my listeners can reach out to you.
Absolutely. So they should go to http://go.moneyanswers.com/wealth matters. And they'll see it there. And so I've got some links to some of the things we talked about. I have a free newsletter. I've got the free Money Answers videos. There's just all kinds of links, and I just love to help people, and I'd be glad to take emails from your listeners as well. So I love to be helpful.
No, that's awesome. And you responded to my email, so I can vouch for that.
I do. I've been doing this for many years.
Yeah, thank you so much. And again, I'll put that link in the show notes as well as on my website. And I appreciate your time today.
Terrific. Well, thanks. Hopefully it helped them. These are things that most people have never heard about. I mean, just look at what we did in our time. We paid their debts off much quicker. We got them with all the mistakes on their mortgages. We got them great deals on cars. I mean, we've helped them hopefully, in dramatic ways here.
Oh, that's awesome. If people can take action on one of the items, they'll be making some moolah, right there.
Absolutely.
Or saving some money.
And feeling empowered as well.
Yes, yeah, that's the key, right? Feeling empowered, of feeling like you are in control. That's
correct.
Really important. So I appreciate your time. Thank you so
Very
much.
Good. Thanks so much, Alpesh. Appreciate it.